Last time, Gates sold 11 positions and bought only 1. He sold all of Alibaba, Boston Properties, and Uber. He trimmed 50% of his positions in Google, Amazon, and Apple. His latest 13F for the Bill and Melinda Gates Foundation.
Hey there guys, what's happening and welcome back to our channel. It's crucial to realize that statistics aren't everything when it comes to technology stocks. After all, there are plenty of examples of high-flying firms that didn't make a dime in earnings, but yet managed to beat the market anyway. That's because tech companies are unusual in their capacity to develop fast and, once they reach critical mass, convert a money-losing company into a big cash cow. So let's check out the best stocks in tech to buy in 2021. Don't miss out. Number 5, Microsoft.
And then we're going to look ahead to the end of 2021 to see maybe where Microsoft's stock price will be coming into 2022.
What is there to say about Microsoft that isn't positive? Its size is unparalleled since it's the second largest US business by market value after only Apple. Its size is unparalleled since the second largest US business by market value only after Apple. This fiscal year is anticipated to bring in over $166 billion in revenue. With $125 billion in cash on hand, its balance sheet is as solid as they come. It's also one of just 2 US equities with a AAA credit rating from Standard & Poor's, with the other being healthcare behemoth Johnson & Johnson J&J. The true allure is that, despite its already amazing domination, Microsoft is still expanding at a rate that puts other firms to shame. Revenue is expected to increase by 16% this year, with profits per share expected to increase by 35% from $5.76 in FY 2020 to $7.77 in FY 2022. Those figures are promising for any stock, much less one that is currently at the top. Number 4, Medallia.
Today we're going to take a look at this company and just go very quickly. This is not going to be an in-depth video.
Medallia is a business that specializes in big data and artificial intelligence. It aims to analyze data and give structure to unstructured data that many organizations are now unable to navigate on their own. You could be thinking to yourself, that's just Silicon Valley nonsense, and you'd be correct. Consider the following scenario. A financial institution scours its customer data for signals indicating that some account holders are likely to begin investing in stocks or take out a mortgage in the coming months. It then presents them with well-timed and tailored marketing. Doesn't that seem like a lot more significant than a bunch of buzzwords? Medallia effectively does this by assisting businesses in maximizing the potential of their customers, partners, and workers. Consider that this company's revenues increased from $402 million in FY 2020 to $477 million in FY 2022, which concluded in March. If you're still not convinced, that's a 19% growth. This fiscal year, sales are expected to reach $516 million, which is another 17% increase. Number 3, Cohu.
They operate in a very interesting business. They're a leader in semiconductor and PCB testing and inspection.
Cohu is a one-of-a-kind technology stock that caters to the semiconductor sector. Instead of being a chip maker, it focuses on inspection equipment that it sells to clients all over the world, making showy branded chips that give huge profits and power cutting-edge consumer gadgets may not be as appealing to certain investors. Nevertheless, it's a profitable industry to be in as chip makers create more complicated processors with little tolerance for error as consumers expect both dependability and excellent performance. Cohu stock's profit growth is what it truly matters, as profits per share are anticipated to climb from $1.19 last fiscal year to $3.17 in 2021, which is a nearly threefold increase, fueled by a 46% increase in revenues if this year's predictions hold true. Despite the fact that Cohu stock has soared by more than 150% in the last year as a result of this momentum, it's crucial to note that, at present levels, the company is properly value based on that EPS projection. Kohu had a forward PE of around 12, while the average company in the S&P 500 has a forward PE of around 23. That implies, unlike other well-known tech firms, investors may look forward to considerable growth without having to pay a hefty price for it. Number 2. Axalis Technologies.
I just want to show you that the name is this one, and I want to show you that if I buy it right now, it's 15.33 US dollars per stock, and market cap is in millions, which means it's a medium-sized firm.
Axalis Technologies is a semiconductor service business that makes ion implanters, which is a fancy word for the equipment that's essential to creating microchips. It's one of the more simple tech stocks on this list. If you're into science, you'll know that ion implantation is a high-tech coating technique in which ions from one substance are implanted into another solid material to alter the surface's physical and chemical characteristics. When you examine the small but complicated components that make up current gadgets, you can see why this technique is necessary. Simply constructing a lot of different bits and putting them together isn't going to cut it. For a fast assessment of this growth path, just look at the basics. Revenues are expected to increase by 17% this fiscal year and by another 11% the following year. At the same time, current year profits per share are expected to increase by more than 44% this year and by 32% next year. ACLS has somewhat outperformed the S&P 500 index over the previous 12 months with a gain of approximately 58% compared to roughly 37% for the S&P 500 index. However, with some industry insiders anticipating that the semiconductor disruptions would last up to 2 years, this tech stock might be seeing a continuing rise in 2021 and beyond. Number 1. ACI Worldwide.
At ACI, we're made for this moment. A simple transaction, millions of times per day, billions per year. We think about this moment every day.
ACI Worldwide is a payments technology firm that acts as an electronic link between banks, billers, and retailers. In other words, ACIW is more interested in being at the heart of mobile payments infrastructure than in ensuring that it has a substantial market share for its mobile payments app. As a result, ACIW takes a unique approach to cashless transactions, focusing on enhancing fraud prevention and lowering interchange costs, which are invoiced to a merchant each time it digitally charges a consumer account. Revenue growth, on the other hand, has been less remarkable. However, activist investors at Starboard Value began amassing a position in the tech stock in early 2020 and have been pressuring the business to maximize shareholder value in any manner imaginable, including exploring the possibility of a sale. Due to its roughly 8% ownership interest in ACI Worldwide, Starboard was able to assist in bringing on 2 new independent directors to the board in February. Other Wall Street investors have praised the move, anticipating that it would help the tech company rise even higher in 2021, either by ongoing continuous improvement or a large one-time transaction. With that out of the way, do let us know which of these tech stocks you're looking to invest in right now in 2021. With that being said, if you enjoyed this video and want to see more like this in the future, then all you have to do is like, share, and subscribe. And with that, I'll catch you guys later in another video. Bye now!